Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in and rent decline is spreading into almost every single metro area across the United States. And today what we're going to do, guys, is we're going to take a look at the data and we're going to study what metro areas are declining the most and if any metro areas are still going up in rent. And this is going to be really important to understand, guys, because going into 2023, if we have a rental collapse, which is good for most Americans, that will absolutely destroy the investment demand in our housing market. It's going to lead to a bunch of short sales, bankruptcies, and foreclosure because, again, you guys, there are so many people that are leaning on the rental market to survive through the recession. And quite frankly, there's so many people with hundreds of rentals that need people to pay rent to cash flow. If they don't cash flow, what do they have to do? Liquidate. In order to liquidate in a distressed housing market, you normally have to sell your house for under market value. So anyways, guys, that's what we're going to explore today. Do me a favor, like this video, subscribe if you haven't already, shoot me a comment below, hit notifications, share this video, and help me push this message. Either way, let's get started now. In order to do that, we're going to read a Business Wire article that's titled Apartments.com publishes November 2022 growth report. And this is really great, guys, because this is going to be straight data. There is so much preconceived notions. Is rent going up? Is rent going down? Right? And all I hear from investors, oh, rent's going up. Keep buying, keep buying. So let's look at the actual data. Do you guys agree? Let's just look at the data and see whether or not rent is going down. I think you guys are going to like what you see. So let's briefly read part of this article, you guys. Apartments.com, a CoStar Group company, released an in-depth report of multifamily rent growth trends for November 2022, backed by analyst observations. Monthly asking rent declined for the fourth straight month, with the Sunbelt, Las Vegas, and Phoenix highlighting the true nature of the deterioration rent situation. Monthly rents have decreased for 4 straight months. We witnessed a slower decline from October to November, with rents down $6 or 0.4% compared to a decrease of 0.6% just 30 days prior. As market conditions slip further out of equilibrium with new deliveries far outpacing demand, we expect monthly rents to continue their downward trend. Multifamily market weakening despite positive year-over-year rent growth. National year-over-year rents continue to remain positive, but fell down to 4.1% in November compared to 4.8% at the end of October. Miami held the top rent growth spot along Midwest and Gateway locations that have gained traction in recent weeks and currently hold positions in the top 10. None of the top 40 largest markets saw their year-over-year asking rents expand in the month of November. Historically, the fourth quarter tends to be slower for multifamily, but we're witnessing a weaker market overall with the downward rent growth and volatile market conditions. So looks like the cat is starting to get let out of the bag. Don't you guys agree? Again, you guys, this is a really big deal. I don't know if you guys understand how big a deal it is if we lose the rental market, but it is what it is, guys. What we're going to do now is there's really 2 data points to look at. There's year over year, and then there's month over month. So let's start on year over year rent growth and see what metro areas still have the highest year over year and what metro areas, if any, have year over year rental decline. Take a look. Okay, guys, so this is the year over year rent growth by market for November 2022. Now, I do want to point out that currently there are no metro areas with year-over-year rent decline. And the reality is, nor should there be. The thing is, guys, rent went up so quickly. The fact that, some of these are barely in the year-over-year rental growth, I mean, that's shocking. That means that the rental market is deteriorating. So Miami seems to be the strongest rental market because it still has rental growth of 7.7, followed by Indianapolis, Orlando, Cincinnati. Surprisingly, San Diego is up there. So that could be a super strong market if you want to invest in. Fort Lauderdale, and Columbus, St. Louis, Salt Lake City. So, on this side, the strongest. Now, on the right side are the weakest metro areas as far as year-over-year rental growth. Let's start at the bottom. So Phoenix and Las Vegas, guys, more than likely you guys are going to get some great deals out in Phoenix, out in Las Vegas as the market continues to crash. That's followed by San Francisco, East Bay, Atlanta. Thank God, Atlanta. There's been so much investing in Atlanta. Like Atlanta has been shocking. Minneapolis, Baltimore, and Austin. So it's going to be super cool to see, guys, when we have our first metro area with year-over-year rent decline. Now, obviously, that's going to happen in 2023. In 2023, we're going to have many metro areas, just like right now we have many metro areas with year-over-year price decline. We're also going to have many metro areas with year-over-year rent decline. As hard as that is to believe, if you guys just look at the supply and demand, if you look at all of the building right now, it's going to happen. All right. First of all, I don't have a crystal ball. There could be a black swan event, but I'm pretty sure it's going to get even worse next year. Now let's take a look at what's happening more currently. And in order to do that, we're going to look at the month over month rental growth or declines. And I think you guys are going to be blown away by what we're seeing on a month over month basis. Okay, guys, so here's the real data. And I just want to point out real quick that only 6 metro areas, only 6 metro areas, okay, had rent growth. Okay, so 6 of the main metro areas had rent growth, and you guys, barely any rent growth. Look at this, 0.1, 0.1, 0.2, 0.2, 0.3. Now, Palm Beach surprisingly did have a lot of month over month growth, but that's really it. Outside of Palm Beach, there's really nothing else. But I want to just kind of bring your attention to the right side of this graph here, starting at the bottom. So Raleigh, North Carolina is actually declining in rent the fastest with month over month decline of 1.1%, followed by Seattle. So Seattle is actually number 2 for month over month, then San Jose, then Austin, which I've been watching a lot. I may move to Austin. I doubt it, but I actually like Austin except for the prices. But Austin's down 0.9%, Charlotte, Atlanta, Boston. These are good names to see. San Diego's on there, guys. Las Vegas, Phoenix is on there. New York is on there. Orange County, California is on there. So a little bit of relief in Orange County, California, Salt Lake, Baltimore, Chicago, Orlando. Do you guys see this? I mean, almost all of these metro areas, I mean, they're losing rent. This is good. This is really good for us, for us people that want the housing market to the reset, right? Or crash. I'm just going to call it a crash or negative equity growth. This is going to add to the negative equity growth. And actually, guys, it's really important to understand that without that piece, we're not going to have as much, equity drop. Mark my words on that because of the lack of supply, right? But as a result of rent going down, less investor demand, more fire selling, more liquidation from investors, this is going to get real interesting really quickly going into 2023. Do me a favor, guys, comment below and let me know how you feel about year over year rent growth and whether or not you think it's actually going to go up in 2023, because history says it will. History says rentals will go up, right? But I don't think it's going to happen this time. We'll see. So this is the last part of the article. Las Vegas and Phoenix see dramatic slowing of growth. The majority of the markets with the fastest growing rents throughout 2021 are now seeing the quickest pullback. In particular, Las Vegas and Phoenix have both witnessed a dramatic slowing of growth and sit at the bottom of the annual rent growth ranking for November. Las Vegas year-over-year asking rent decreased from 22% in Q4 of 2021 to 0.4% at the end of November. Phoenix isn't far behind with year-over-year rents dropping to 0.4 from 20.8, my gosh, just 11 months earlier. Sunbelt Coastal California round out worst performing rental markets. Month over month rents paint a stark picture of the deteriorating rent landscape. Only 9 of the 40 largest markets saw month over month rents holding positive or at zero. In absolute terms, San Jose rents declined the most over the last 30 days, down $28 or 0.9%. Sunbelt markets constitute 5 of the 10 worst performing rent growth markets over the past year, with coastal California markets like East Bay and San Diego also weakening. Congratulations, San Diego. However, Raleigh takes the top spot in November, with rents retreating by $17 or 1.1%. Congratulations, Raleigh. Seattle wasn't far behind with 1% rent decrease. Now, unfortunately, my head is blocking these words, but here's what I really want you guys to pay attention to, because this is essentially saying what we can look forward to moving ahead. For a sign of how fast and deep annual rents have fallen thus far in 2022, Las Vegas and Phoenix are striking examples. Almost a year ago, both of these markets were recording rents up 20%, and today they are both barely positive. With a potential recession looming in the first half of 2023, the current mismatch between supply and demand appears likely to widen even more. Therefore, the downturn pressure on rents appears likely to continue across the nation, but especially in oversupplied Sun Belt markets. Pretty heavy, right? A lot of people didn't see this coming, right? I mean, this is going to get crazy. I mean, I'm taking notes here. I don't know what's going to happen. I don't know everything that's going to happen, but what I do know is we have a problem, and I'm focused on that problem, because if we stay focused on the problem, we can stay focused on finding a solution. And I believe my solution: credit, income, assets, prepare, good mindset, right? And wait. Number one, wait. It is what it is. In conclusion, we have entered one of the fastest housing market recessions in the history of the United States. And when I say housing market recession, I apply that to both purchasing real estate and renting real estate. And I still don't think most people understand how bad it will really get for the housing market in whole, if the entire rental market collapses, because it's going to be really, really bad for investors. But if you're like me, on the sidelines with excellent credit, I'm saving as much money as possible, I'm working as much as I can, I'm educating myself on my local market trends, and as a result of all of that, you guys, I'm going to be one of the few winners on the other side of this housing market. And my plan is to take as many of you with me as possible by being transparent, forthcoming, and giving you guys clean data. Now, other than that, guys, I really appreciate you following along with me on this journey. And if you're out there investing in real estate, I wish you luck, and I hope you win.